Hi everyone, welcome to this week's edition of the Money Talk NGX Weekly Heatmap Review, covering the week ended August 14th, 2026. What we do here every week is to give you an insight into what happened in the market in the previous week so it can help you in making your portfolio decisions. We give you a sector by sector analysis, the top movers for the week, the daily movement for the week, key decisions or actions in the Nigerian market and in some specific companies that might impact their share prices or the movement of the entire all share index. This week, the Nigerian stock market hit an all-time high on Monday, but by Friday, it has fallen for four straight days in a row to close the market at a negative 1.20%, with the all share index closing at 242,619 points and the market capitalization at 156.62 trillion naira. For the week, only 26 stock gains, 59 stocks declined, and 26 stocks stayed flat. That is one of the narrowest week we've covered in this series. Now, let me talk about what exactly moved the record high Monday and turned it into a 4-day slide. The trading volume for this week was 12.15 billion shares. That is more than times two of what we had last week, or 5.359 billion. The value traded, on the other hand, was 176.6 billion naira traded. That is up 27% from last week. Both number went up, right? But why does it feel cheap? Then we need to do some mathematics here. If we divide the value traded by the total volume traded, it gives us the average price per share. Last week, doing that calculation, the average price per share was 25.95 naira, which is even cheaper than the previous week. But for this week, the average price traded was 14.49 naira. That is a 44% drop in the average price. Even though the volume went up, the value rose in absolute terms. The volume increased by 127%, while the value only increased by 27%. That's a huge divergence in the raw trading activity and the money actually behind it. The trading has swung hard towards cheap, low price stock. And as I said again last week, cheap doesn't mean the stock is high valued, it's the absolute naira value I'm talking about here. There's a number this week that could be linked to this low price movement. Three insurance companies in the financial services sector: Fortis Global Insurance, Cornerstone Insurance, and Consolidated Hallmark Holdings, accounted for 9.488 billion shares. That is 78% of the entire week's volume. And this only happened in 1,781 deals combined. The financial service sector for this week went up to 92.25% of the total volume traded. That is the highest concentration we've seen in the whole series. We'll be talking about some of the things that led to it in the future slides. Now, let's look at the daily performance of the NGX. As I said earlier, on Monday, August 10th, the all share index closed at the record high, up 1.21% to 248,530 points. The market cap crossed 160 trillion for the first time, but here's the catch. The breadth was actually negative on this day. More stocks were falling than rising, even as the index closed at a record high. A handful of heavyweight stocks like Airtel Africa carried the market on their back, while a couple of them fell. So as you can see, we have 37 decliners and only 23 advancers for the week. On Tuesday, pullback began. The ASI closed at a negative 0.73% to 246,723.57 points. But for the breadth, it seems to improve. We had 28 advancers against 27 decliners, but the index still fell, which is a reverse of what happened the previous day. On Wednesday, the same story again. The market was down 1.12% to close at 243,967 points. The breadth was balanced, with 28 stocks advancing and 28 stocks declining. That's 2 days in a row when the breadth looked more positive, but the market fell. On Thursday, the market was down by 0.23%. And on this day, we had the week's heaviest volume of 4.238 billion shares traded during the day. And this is the same day NICOM dropped the major regulatory announcement, which we'll be talking about shortly. On Friday, that's the 14th of August and the last day of the week, there was a smaller decline of 0.1%, settling the market at 242,619 points. So this is the market closing at a slightly stronger note, although it's a negative, but it is a smaller negative compared to the previous days of the week. So the full shape for the week is there was a spectacular high, then 4 consecutive days of decline, but not all 4 days were the same. Two of them showed balanced breadth, and this did nothing to stop the index from falling. So now let's do the sector by sector analysis. We'll be starting with the financial services sector this week. And as we can see on our board, for the first time in a long time, First Holdco is declining slightly by 3.71%. That is after going over 100% this year already. GT Bank advanced first time in about 4 weeks by a marginal 0.39%. Zenith Bank declined by 2.7%. So for GT Bank, we can see that for the year, they've advanced by about 45%, while Zenith has advanced year to date by over 90%. And if we look at historically, these two stocks tend to follow each other. And that is saying something about the possible movement between now and the end of the year. Your analysis, and you could get some insight on which of the stocks in this financial service sector we should be buying. Looking at the top movers for this sector, we have International Energy Insurance up 31.6%, and we have the top loser for this sector, Ava Capital, down 34.55%. We'll be talking about them shortly in our movers list. As I said earlier, the total trade for the financial service sector was 92.25% of the market's entire volume for the week, and the likes of Fortis, FTG Insurance, Cornerstone, Consolidated Hallmark Holdings were 78% of the volume. From what we saw, these three insurance companies are already made their NICOM recapitalization requirement as of July 31st, 2026, and this extreme volume is not linked to a compliance quibble, them trying to meet the requirement, or from the information we have, not a distressed signal. We can see this activity as an industry-wide verification process winding down, and investors are probably taking positions. And when you see such movement, I feel there are some non-public transactions going on, and in the coming weeks, we'll be getting more insight into what this move could pertain to. Now, let's move to the next sector, which is the consumer goods. As we can see here, the top gainer for this sector is Capri Nigeria, while the top loser, who we'll be talking about shortly, is Unilever Nigeria, down 18.94%. On an entire group, the consumer goods fell by 6.72% this week. This is the worst performing sector index in the entire series. Some of the drivers for that is we have Bois Cement, down 10% for the week, and this 10% was just hit on Wednesday. We have Dangote Sugar down 11.58%, and following their relatively good reports they released for the H1 quarter. We have FTM Cocoa also down. The consumer goods seems to be under significant selling pressure recently, and this has been showing on week, and let's hope they receive some breaths of fresh air. In the industrial goods sector, you can see all companies here fell. Those that didn't fall didn't move at all. We have the likes of HBN NG falling 7.22% after gaining in the previous weeks. We have TIP declining by 3.7%. We'll be talking about them soon. Austin Last Cotics also declining. In the ICT sector, the top gainer for this sector is Champs Holdings, up 12.25%, while the top loser is Amatech at 9.04%. MTN also declined during the week. Airtel continues its gain of 8.59%. There were also some disclosure of some continuous share buyback from the company itself. So this is probably some of the drivers for the gain for Airtel. We also have the oil and gas sector, also entirely red, topped by Oando at 1.82%, followed by Seplat, then Japo Gold, Eternal. Eternal declined slightly. They gained in the past week, so this is a slight decline from that week. We also have the services sector, a mixed bag here. Also on our top gainers list is Transnational Express, up 32%, while the top loser here is Caravan Offshore, down 9.09%. That's a reversal from last week. We'll talk about the top gainer in the top of our slide. We have the construction. Seems UPDC and UPDC REIT have a weekly move. Either they swing positive this week, the following week they swing negative, the following week again they go positive. That's the trend for them, and they tend to move in the same direction week on week. We have the Eldon Macau swinging negative this week. On the healthcare sector, only one mover, which is Nemeth, moving slightly negative. That's so, which means the sector is almost flat. We have the agricultural sector with livestock only the one edging a marginal profit of 0.63%. Stitches is falling massively. So this fall, although it seems to be high, if you look at their year-to-date gain, Zichis has gained over 700% year to date, and that's one of the reasons they were suspended earlier in the earlier in the year. But we'll talk more on that later. In the conglomerates, also a red zone, all of them falling for the week, led by John Oates down 9.9%, followed by Cheleram down 9.68, Transcorp is down 5.1, and USCN is down 4.56. Utilities, you can see no movers for the week. Both of them staying flat. Go cooling down after previous week's fall. In the natural resources, one mover only. Thomas Wyatt again on our list declined by 14.33%. Investment group VFT was able to recover. They recovered from last week's loss to gain 7.83% this week. So now to our top gainers for the week. We start with Transnational Express, up 32% for the week. We see this as a technical bounce from their 23.76% loss last week. No new catalyst from the information available to the public. International Energy Insurance up 31.68%. This name has a well documented historic frequent last swing, so they've been moving both negative and positive. We also have Sovereign Trust Insurance. Sovereign Trust was one of the names that were confirmed by NICOM as fully compliant. Two factors: people buying the shares based on the fact that they are now compliant, and some part of the compliance means they need to increase their total share capital. We have Chams Holdings gaining 12.25%. They gained about 9.8% on Monday alone, part of the record high rally alongside Fortis Global, NACO, and Sovereign Trust on Monday. CWG up 9.74%. The gain was specifically on Wednesday when some stocks were falling. So it appears some investors were moving to CWG while other stocks were falling. On the loser side, we have Evercap down 34.55% to 7.2, which is below their listing number. If you remember last week, I pointed to the fact that their P ratio seems to be far above the market average and even their sector average at over 53, and we can see that some of the gains are being given back this week. Some of the reasons for this was because the stock is still traded at out of the total 5 billion shares. 80% of that is held by two of its parent entity, which means only 20% at 1 billion shares is traded. So marginal purchases could swing it both positive and negative, and that's what we've seen last week and this week. Unilever is down 18.94%. Unilever during the week released their financials, and we can see that revenue was up 22% to 119 billion naira. The profit before tax was 29.2 billion, and the profit after tax was 15.6 billion. From all indications, this appears to be a strong half year, but the stock falling about 90% are two things that could have led to it. One is the broad consumer goods profit taking or market sell off. The other thing is that people or investors had higher expectation for the H1, and receiving that, they had to price the stock to what they expect. But let's see the performance for the next 2 to 3 weeks. That will give us a guarantee of the reason for this move. We have Sitch's Agros Allied down 15.08%. We've spoken about them during the heatmap review. Thomas Wyatt down 14.33%. They've been on our list for the past few weeks. No new information for them. Down to Sugar also down 11.58%. This is part of the broad consumer goods market sell-off. We saw their result last week. It's a relatively positive result also. They moved from a loss to a profit for the H1 result, and we should expect that the market should, even if it doesn't move up, it should balance at a certain point. But we can see this is closer to their right issue price of 60 naira to a share, but no specific new public for this sell-off. Now there are some companies that went active this week, and I just wanted to give a few analysis on their position. We start with TIP, that's the Initiate PLC, with a share price of 26 naira, and the interim dividend was 0.2 naira, that's 20 kobo. And looking at, because that's interim, so assuming the full year in dividend is times two of that, which will be 40 kobo, their yield will be 1.54%. They currently have a PE ratio of 5.6, and looking at that compared to the market of 11.2, there seems to be less than half of the entire market PE ratio. But when you look at the NGX Industrial Index, a PE of 14.999, so based on PE ratio, initiative seems to be cheaper than the broader market price, but year to date, they're actually already up 95.49% from the beginning of the year. We have Ikeja Hotel at 43 naira, which is a 2.63 year to date capital gains. They declared a dividend of 0.3 kobo. Based on that, if they double that for full year, their total yield would be 0.14, and they currently have a P ratio of 5.84, and that is also close to half of the total market P. If we look at the companies in their sector, we have the likes of Transcorp at 89, and the wider African hospitality industry average is 9.9. You can also see they are also, based on P, underpriced. We have Presco at a price of 255 naira with a P ratio of 17.53. They have also gained year to date 41.74%. And if we look at their sector, that's the food and agricultural goods sector, which sits at about 23.8x. The Presco seems to be 26% cheaper than the sector, but stands at a 56% premium to the entire market. For HBM Nigeria, formerly Lafarge, with a price of 334 naira and a P ratio of 14.23, they currently sit at a 27% premium to the industrial index of 14.99x. But little insight into HBM's Q1. So if you see, they declared a dividend of 16 naira per share for the period ended June 30, 2026, and that gives a yield of 4.79%. If we multiply that to give us a full year number, that will give us a yield of about 10% for the year. So most of these yield are not very favorable. But if you look at the capital gain, HBN has also gained 148% this year. So depending on when you buy the share, that is what will influence your yield. We have the last person here. We have Seplat Energy at 11,200 with a PE of 6.7. They have also gained at 2.81%. And in comparison to the oil and gas index, which is at the PE of 15.17, they trade at a roughly 10% premium to the industry and a 49% premium to the total market average. On the dividend side, Plat release dividend every quarter, but based on what they released last, multiply that by 4, we have a possible dividend yield of 5.83% if they maintain the same spirit. Key takeaways: limited float could cut both ways. For stocks that do not have a large market capitalization, for example, like I said, for Ava Capital, only 20%, which is 1 billion of their stocks, are available. And it's just got on the market. Not everyone is selling or buying. So few purchases or sales could move the stock either ways. Like last week, we saw that the stock was the top gainer with over 33%. This week they gave back all that gains and now they are even below their listing price. We saw that a couple of employees bought and sold some shares during the week. We also look at the insurance sector with Lasako on Wednesday with a 5 for 6 right issue, which means for every 6 stock you hold, you get 5 new shares at a price of 2 naira. And that moved their total issued shares from 11.08 billion to 20.32 billion. So this is also linked to the Nikon recapitalization wave. We saw that the 3 companies had 78% of the total market trade for the week. And we can see the insurance recapitalization is really impacting the market. This should be concluded by end of August, and then we can get back to the moves in the market and no insurance sector moving it left or right. And then the market can balance and we can know where we are going by September. That is the review for this week. If this breakdown has been useful for you, don't forget to subscribe on our channel. You see the subscribe button there, just click on it so you get notification when we release this every week. You can also follow us on TikTok, Instagram, LinkedIn, Facebook, and X. And if you have that your friend has been talking about making money in 2026, 2027, share this video with them so they can also get this insight. Thank you for listening and see you next week.